Every year your insurance company or insurance broker sends you a document, usually a couple of pages that summarizes your entire homeowner's insurance policy. It's called your declarations page. Most people glance at it, see the premium, and toss it in the drawer. That's a mistake, because your dec page is the single fastest way to find out if you're properly covered, or if you've got gaps that could cost you a lot. So today I'm going to do something that most insurance brokers never do. I'm going to teach you how to read your homeowner's declarations page, line by line, so you can understand exactly what you're paying for. I'm Carlos Vargas, the founder of Vargas Vargas Insurance, and let's get started. Your declarations page, sometimes called your Dec Sheet, is a summary of your insurance policy. It's not the full policy. Think of it as a table of contents. It tells you who's insured, what's covered, how much coverage you have, what you're paying, and when your policy is active. Every carrier formats their dec page a little differently, but the information is the same. And once you've learned how to read one, you can read any of them. All right, let's walk through this together. I'm going to go section by section. At the top, you'll see your personal information, your name, your address, policy number, and your policy period. The policy period shows the effective date and the expiration date. This tells you when your coverage starts and when your coverage ends. Make sure the address is correct, and if you've got the wrong property listed, you could have a claim denied. Next, you'll see coverage A, the building coverage. This is the amount your insurer will pay to rebuild your home structure. This number should reflect today's replacement cost, not your purchase price, not the town's assessment price, and not the Zillow's estimate. If the number is too low, you're underinsured and you might not get enough to fully rebuild your home after a loss. Below that is coverage B, other structures. This covers detached structures like a garage, a fence, shed, usually 10% of your coverage A. And if your building coverage is $300,000, your other structures coverage is typically $30,000. Then coverage C, your personal property. This covers your belongings inside the home and away from the home. This is usually 50% on top of coverage A. Look at that number and ask yourself, if everything in my home was to be destroyed, would this amount replace it? For most people, the answer is yes. But if you have high value items like jewelry, art, and firearms, or any other type of collectible, you may need to schedule those items. Also, as part of your personal property coverage, you get coverage for your personal property that's away from the premises up to 10% of your coverage C limits. So if you're going on vacation, your suitcase never arrives with your belongings, you can file a claim against the airline or your insurance company. Coverage D, loss of use. If your home is uninhabitable after a covered loss, this pays for your temporary living expenses, hotel bills, meals, and rental housing. Make sure that this is adequate, especially if you have a large family and if you live in an area where rental housing is expensive. And if your home is a multifamily, the loss of use coverage also extends to loss of rental income. So if the tenants move out because of a covered loss, this part of the policy would pay you for the loss of rental income. It doesn't pay you if you have a bad tenant and they just don't pay you the rent. Then there's coverage C, personal liability. This is your liability protection. If someone sues you because they get injured on the property, this is what pays for the legal defense and any settlements or judgments. Most people start with $300,000, but we typically recommend at least $500,000. And if you have significant assets, we'll recommend a personal liability umbrella policy. Coverage F is medical payments. This is a small one, usually $1,000 to $5,000. It covers minor medical bills for guests injured on your property regardless of fault. It's meant to handle small stuff without a lawsuit. Now below these 6 coverages, you'll see a deductible. This is what you pay out of your pocket after a claim. In Massachusetts, you may see 2 deductibles, a standard deductible for most claims and a separate wind, storm, and hail deductible, which is often a percentage of the building that you carry rather than a flat dollar amount. This is very common in areas in Massachusetts that are near a body of water due to exposure of nor'easters and coastal storms. Pay attention to this. A 2% wind deductible on a $400,000 coverage A limit means that before the insurance company pays a claim, you've got to pay $8,000 out of your pocket. Below that deductible, you see the premium. This is what you're paying annually, quarterly, or monthly. And you see any endorsements. These are add-ons. Your policy like sewer backup coverage, scheduled personal items, equipment breakdown, earthquake coverage, identity theft. If you're not sure what they are or whether you need them, this is a conversation worth having with your broker. And here's what I want you to do. Every year when you get your policy renewal, pull out your old dec page and check 3 things. 1, is the building coverage still accurate? Have I made improvements? Has construction costs gone up? 2, do I have the right endorsements? Do I need sewer backup? Have I acquired collectibles that go up in value? Do I need scheduled personal property for these valuables? Number 3, what's my deductible? Am I comfortable with the amount I owe out of pocket? Remember, the higher the deductible, the lower your annual annual premium. And if you can answer these 3 questions confidently, you're in good shape. And if you can't, it's time for an insurance policy review. That's your declarations page. Now, you know how to read it, and I want you to understand the reason why I'm sharing this with you is because we believe on understanding of coverage helps you make better decisions and avoid surprises. We don't think you should have to take your broker or agent's word for it. You should be able to look at this document and know whether you're properly protected. Now, the next question most people have after reading the deck page is, how do I know if my building coverage is right? And that's exactly what we cover on our next video. How to figure out how much building coverage you actually need. Watch that one right here. And if you want our team to review your deck page with you, we'll walk you through it together and make sure everything looks right. All of our details are in the description of this video. I'm Carlos Vargas from Vargas Vargas Insurance. Remember, stay informed and stay protected, and I'll see you on the next video.